This is my review of the market activity and my own trading for the week that has just concluded, the second week of December. This week, I closed 1 hour loss, which was a 0.5% loss. I took two trades. One was a loss on New Zealand dollar, US dollar. The second was a break even trade on GBP USD. I missed one trading opportunity on the pound dollar and I traded the wrong asset for the break even trade that I took on GBP USD. I would have been better served taking that trade on euro dollar. So let's go into the chart to see what I'm talking about. Across the board, this week traded bullishly for the US dollar. We see there's a bearish candle on euro dollar, US dollar that has now printed. Last week, traded into this weekly fair value gap with NFP. We had an indecision candle where there was a long wick at the bottom and a long wick on top. And so it was not really clear where this week was likely to go. We can see that now we have something of another indecision candle, although there seems to be more of a bearish tilt because this week's candle closed lower than last week's candle closed after having traded into the weekly fair value gap. So there's still an ongoing battle in this range to see whether this high that was created during NFP will be taken, or if this low that was created 3 weeks ago now is going to be taken and the monthly fair value gap is going to be retested. However, if we go into the daily candles, we can see that the week was entirely bearish, with Friday alone offering a bit of bullish price action. So this was Friday's candle, Thursday, Wednesday, Tuesday, and then Monday's candle. There weren't a lot of trading opportunities apart from the New Zealand dollar, where I took my first trade for the week, which was a loss. We'll go to the New Zealand dollar in a bit. I will come back to this euro dollar Friday price action. Let's go to the New Zealand dollar to see the trade that I took, why I took it, and what happened. On the New Zealand dollar, if I go to the monthly, we can see that what happened was price took out this monthly low right here, denoted by this black line. Price had traded bearishly all week, and I believe it was on Wednesday's candle right here, when price first traded below that low. Again, my strategy revolves around taking trades off of higher time frame fair value gaps and higher time frame swing points. So what I want to see is when price takes out liquidity, trading into a higher time frame PD array, I am looking for a lower time frame rejection in the opposite direction for me to take a trade. My trades are usually short-term trades. So on Wednesday, let's go down to the 15 minutes, the entry time frame. So let's see if we can find Wednesday's price action. I believe this was it. This was Wednesday's price action. During London session, price traded below the low, as we can see here. This was during London kill zone. Now, when price trades below a low of this nature, I'm expecting, even if it's a short-term reaction, it may not necessarily signal the reversal of the trend, but I'm expecting at least a short-term reaction. So when I saw this bullish engulfing candle, you can see that this was the candle that traded through it. Then there was a doji candle that did not go anywhere. That doji's low was taken by the next 15-minute candle, and the entire doji was engulfed. This was the trade idea. Valid trade idea. If this sort of setup presented itself again, I would still take it because it fits all of my entry criteria for a trade. My stop went below this low, and I was targeting Asia high at least. That would have netted me an almost 3 hour trade. What can we see that price did? Price rallied a bit, gave me zero point 0.1 or 0.2 hour profit. Then it completely reversed, took me out, still below the low. But we can see what happened when it took me out. It took me out at the end of London kill zone, and then it consolidated for a while, traded back above the range, traded back into the range rather, back above this swing point during New York session. And then without really giving me an entry, because I can't take any trade down here, it's outside of my trading hours, between this green dotted line, that's London kill zone, and this purple dashed line, that's New York kill zone, there's no trading can happen in this period. Now, when we come to New York did not take out any low for me to take a trade. So New York just expanded. Did it ever get to the target? Yet it eventually got to the target the following day. But unfortunately, it was a trading opportunity I could not capitalize on. Sometimes these things happen. So you let go of it and you move on. This was on Wednesday. My next trading opportunity only presented itself on Friday, and it presented itself on Euro US dollar and Pound US dollar. Unfortunately, I took the trade on the pound instead of on the euro, which is ironic because the setup actually printed on the euro. Here is why. Similar setup to the one that I took on the New Zealand dollar. Let me just show you the actual trade idea. So, whereas New Zealand dollar had traded below a significant low earlier in the week, it was not until Friday when euro dollar traded below this line. You can see the alert that I had set is still there. Let me get rid of it. This was a daily swing point that had been created the previous week, I believe. Yes, Monday, the 2nd of December, euro dollar created a swing point there. So when price traded into it on Friday and traded below it, you can see I had my red line there with the alert. This was what happened. As soon as price traded below it, I believe it was during London kill zone, you see. So this is Asia session on Friday. You can see that I actually got the alert trigger during Asia session. But again, I do not take trades during Asia session. My trades have to come during London kill zone or New York kill zone. So even though Asia was the first to trade below that low and trigger it in, I did see the alert, but I knew that I could not take a trade. So I was monitoring it. As a matter of fact, I thought that the trade idea was no longer going to play out because sometimes what would happen is that the setup would actually occur during Asia and you don't get an entry during London. But the reason that we wait is we can see that after Asia traded through it, it basically just consolidated. The trade idea was still valid. So what did I want to see? I want to see Asia low taking. This happened here during London kill zone. Asia low was taken, and then it took a while for us to see the engulfing candle that triggers us into the trade. We can see that after this low was taken here, the next 15-minute candle also traded bearishly, but you can see that they were relatively equal lows here. Look at this candle's low, right next to this candle's low, right next to this candle's low. I do not like to see this sort of price action where price is forming relatively equal lows at a point where I want to take a trade, because there's a likelihood of price still coming back down here to take out all these lows before eventually moving to the upside or just continuing lower. So that's the reason I did not take any trades at that point. However, the entry was given when this huge emphatic bullish engulfing candle was printed. Now, when this happens, it tells you that, okay, whoever wants to move the market higher has actually stepped in with this huge 15-minute bullish engulfing candle. So this would have been the trade. I would have had a 17 pip stop loss. My stop would have been here. And my target was the previous day's, Thursday's New York high. As long as it gives me better than a 2R or a 2.5R, that's my target. So this was the trade idea on Euro US dollar. However, at the same time, I was taking a look at the pound dollar. On the pound dollar, and after I take a look at the trade on the pound dollar, I will talk about the missed trading opportunity on the pound dollar. I missed that trading opportunity, I believe it was on Thursday, the previous day. So my psychology was a bit off, and that's probably why I decided to take the trade on the pound dollar. That's probably why I ended up taking a break-even trade. So missed trading opportunities can really have an impact on you, especially when I had taken a loss earlier in the week. So I took a loss on Wednesday, and now the trade that would have made back that loss that I made and more, I ended up missing it. And then on Friday, I ended up taking a break-even trade, whereas I could have taken a profitable trade. So these things sort of mess with your psychology, but it's important to recognize your emotions for what they are, to not act on them, to be able to wipe the slate clean and begin the new trading week with a fresh slate. So at the same time that the euro dollar setup was printing, the pound was also trading into a daily PD array. Now, if you recall from my previous videos, this daily point is the same daily fair value gap that gave me 3 trading opportunities last week. This was the daily fair value gap that was created. See, price tapped into it on this day. On Monday, there was a trading opportunity. Tapped into it on Tuesday, there was a trading opportunity. Tapped into it on Wednesday, there was a trading opportunity. So those 3 days, it respected that level and traded higher. Now, price came back into it. Ordinarily, when price is testing it the fourth time, I would not look to trade away from it. However, on Friday, pound dollar news had come out. This is these two massive bearish candles that you see here. What that meant was that the range between the entry point of the trade and Asia high was bigger, was more significant than the range between the entry on Euro US dollar and Asia high for the same day. So take a look at this. From this was the entry. From the entry to Asia high was 43 pips. However, from to Asia high of that day. However, on Euro dollar, at the time when the bullish engulfing candle happened, this was Asia high. This was Asia high. It was a 0.53 hour trade. So when I saw it, I wanted to target the nearest liquidity pool. That's my strategy. So if I'm taking a trade, I want to see Asia high of that day. Does it give me 2 hour or better? For me to take this trade on the euro dollar, I would have had to target the previous day's New York high. And you can see that the previous day actually had quite a bit of expansion. So at the time, it seemed to me like the euro dollar trade would be giving my trade idea more work to do. Whereas if it was going to expand up anyway on the pound dollar, it did not need to do much to get to yesterday's Asia high. This was my reasoning. I could not have been more wrong. But that was the reason. So at the same time that that 15-minute massive bullish engulfing candle printed on euro dollar, this was what had printed on the pound. So we can see that price had traded into the level. This hammer candle printed. And over the course of the next few minutes, this candle, this doji, this indecision candle is actually the same candle that's printed on the 15 minutes on euro dollar. So I took the trade somewhere around here. My stop went below this low. And effectively, as euro dollar was expanding, we see that there was a significant, let's go back to euro dollar. We can see that there was a significant expansion on euro dollar. Every single one of these candles, huge bullish candles. The equivalent candles on the pound, however, were very, very muted candles, very measured candles, not a lot of expansion. So you see, there were those two huge expansion candles that was here and that was here. And it did not even take out Asia high. Essentially just took out the high of London Open and completely reversed. So at the time when I was targeting what basically just a 2.4 hour trade on the pound, euro dollar had already given me an about 3 hour trade, had taken out the objective, which seemed like the hard objective. Look at this 2.8 hour trade had already been closed on euro dollar, and I was still holding my pound trade, hoping that pound was going to go higher. So somewhere along the line, when I saw that price started reversing, I moved my stop, to break even, and then price eventually just took me out for break even. Very painful when you know that the entry actually printed on euro dollar, the trade actually played out on euro dollar, but just because I thought pound was going to have an easier time hitting the target, I ended up taking the trade on the pound dollar, and the correlation was totally off on that day. Now, to be fair, pound news came out and it wasn't great for the pound, but I guess I put a little too much faith in correlation, and this was what happened. So I ended up taking break even. Now, for the trade that I had missed, still on pound, still on Thursday. This is a weekly fair value gap, as we can see. At the time, the reason I missed this trade is because, again, I was looking at euro dollar. So it's ironic. When I was looking at euro dollar, I was supposed to be looking at the pound. Now, when I was looking at the pound, I was supposed to be trading euro. The previous day, Wednesday, created these relatively equal highs that we can see here. Asia high was created relatively equal to London high, right? So this is what we can see here. Relatively equal highs were created inside, hold on, snap to this thing. Relatively equal highs were created inside of a weekly bearish PDRA in the form of a weekly fair value gap. As soon as price traded above it, look at this beautiful trade. During London session, price took out the high here and then printed this beautiful shooting star candle right here. This would have been the trade, right? Stop goes below Why do these position tools always do this? Anyway, stop goes above the high. And if I were holding this trade, I would have looked to take profit somewhere here at the previous day New York low. That would have been a 5 hour trade. Look at how much more this trade moved. If I targeted this low, that trade would have been an 8 hour trade. If I continued holding 13 hour, ultimately that trade bottomed out at 18 hour. This was a trade that I did not take because at the same time that this higher high was created, taking out the previous day's Asia and New York highs, I was looking at the euro dollar, and the euro dollar created a lower high formation. So this was the same day. You can see that this was the Asia range for that day. Price traded high. But London was not able to take out New York and Asia high the previous day. It created a lower high here. So I was not looking to take this trade. If I had just looked at the pound dollar on that day, I also did not want to trade because I believe PMI was coming out that day. You can see this terrible price action. So ahead of was it PMI? There was a major news release. I can't remember what it was now that was coming out. And so ahead of that, I was thinking, maybe I don't want to get into the market. And then I did not even get a trade entry. But if I had just looked at the pound, I would have seen the trade forming, the trade idea forming beautifully. What could have easily netted me at least, I would have taken 5 hour or 6 hour out of the trade, and that would have put me in profit for the week. So this was my trading. Not really much I could have done except be more vigilant. And next time, I say the lessons I took away from this is always be more vigilant. Look at all your pairs, which I did on Friday, but ended up backfiring against me because if I had tunnel vision on euro dollar where the entry was given, then I would have made money on the euro dollar. So these are some of the things that you can't really control in trading. You can get better at it, but every now and then you'll still miss opportunities. You'll still take the wrong trade. You'll still see a trade playing out on another pair that you did not take, etc., etc. So this was my trading for the week. I ended up taking just the New Zealand dollar negative trade that cost me 0.5%.